Hello traders, it's Wednesday, March the 13th. This is John Kicklighter, Chief Strategist for DailyFX.com, here to give you your FX market wrap-up for the past 24 hours of trading and out for what we can expect in the coming 24 hours and, of course, what's beyond. Now, this past 24 hours, just like the opening 24 hours of the week, was more about congestion or continuation of more restrained trends. This is a setup for something more active, something more remarkable in the forthcoming future, and it looks like things are going to pick up and be far more interesting in the starting in the coming 24 hours. So there are a number of facets of fundamentals that we should be watching, a number of pairs that look particularly interesting, a number of themes that look exceptionally interesting as well, and we'll cover them in today's video. But we'll start off our conversation where we started off 4 out of the past 5 videos with the euro dollar. This is as you can see quite clearly, a technical pattern that is working its way into a terminal congestion pattern. Now, for those that aren't familiar, terminal congestion pattern just means that it's going to come to an end and it has to have a breakout. Right? Whether that breakout is meaningful, meaning there's strong movement after the completion of the pattern, the break of the pattern, that's another thing totally. But it has to have a resolution. And at the pace it's going to have a resolution by the end of the week. That's perfect, because we have a lot of event risk that is starting to pick up in risk trends, and I talked about a theme that's very strong. Risk trends is one of them. We have a particularly strong event risk from the euro side of things as well. So there is a lot here that we can work with that could generate the necessary break pressure. All right, and I don't want really a break that's just going to trickle over, see a technical move beyond one of the boundaries, whether it be bullish or whether it be bearish on the outcome. I want a break that has follow through. I want a break that can actually be traded, because a false breakout simply, while it can be traded, is simply a time killer, and you're just waiting for that committed move, whether it be a false breakout reversal or whether it be a false breakout stall and continuation. It is a pause in between, and we want to see that consistency. We want to see that action. All right, but from the euro side of things, there was some interesting price action, and we have a setup in terms of potential across a number of euro-based crosses. The euro dollar, it just happens to be the most clear and concise one, as you can see quite clearly here. But we also have some interesting setup in the euro pound. Now, it might not be as clear in this short-term chop, but look at what the bigger pattern looks like. All right, that's a multi-year descending trend line going all the way back to 2008. That is quite significant. Also happens to coincide with the 50% retracement, or the midpoint for this big range from 2008 to current times. So that is meaningful resistance at 87.75, but we're working our way into that top. Is it going to be a break to the upside, or is it going to be a break to the downside? A lot of that's going to have to do with the euro, but also a lot of it has to do with the pound. We'll cover the pound in a second. We can also look to the euro-yen, exceptionally interesting currency. Once again, this can be pushed by the euro, but I think that the yen is probably going to be the more consistent catalyst, the more consistent trend generator, because it follows risk trends as well as the expectations for the Bank of Japan. And we've had some developments on the Bank of Japan side of things with a lot of the commentary that was given at the testimony by the governor nominee and the deputy governor nominees. Their vote, whether they're going to succeed Shirakawa and his two deputy governors, is going to take place on the 14th and on the 15th, first through the lower house and then the upper house of Parliament in Japan. So that's going to be an interesting thing, but once again, the euro can have a participation here. And from the euro side of things, if you weren't, you didn't have the indicators, right? A lot of people just look at indicators, they think that's the only thing that we need to pay attention to. You didn't really have that many notable economic indicators on the euro docket. You could have looked at the Greek industrial production figures, which came out to be better than expected, and essentially that's about it. The German CPI figures, but that really doesn't really change the ECB's path, and that's really why we watch CPI figures. But if you were looking closely, you would see something much more concerning. We saw things like Germany's central bank governor. All right, there's national central banks, not just the European Central Bank. The national central bank governor Weidmann actually said that the Bank of Germany has actually doubled its reserves for potential risks of loss through the past year, through 2012, because he thinks that there's clearly further crisis ahead. We have not solved the crisis in Germany. That was only one concern. Another concern, and a chart I actually have pulled up for you, this is the Bank of Greece, right? So national central banks, as I said, borrowing from the ECB. Now these national central banks borrow from the ECB, the Federal Central Bank, because they need capital, they need liquidity for their economy. Look at this. A huge surge, nearly fourfold increase in borrowing by the Greek central bank, because they're looking for liquidity. I don't read that as a good indicator. I do not read that at all as a good indicator. That is a notable concern. We also had Italy, who sold 12-month bills, and they're going to sell 3-year bills in the upcoming session, but they just sold 12-month bills, and they did so at the worst rate since December. So, reminder that the Italian financial situation is another risk. And we have to consider that, yes, this is a reflection on the financial stability of the Eurozone. That is still a serious concern, still a serious threat. So that can actually weigh on the Euro going forward and help provide that break to the downside. Of course, if all financial concerns are just washed away, we don't see the threat of a revived crisis, then we can fall right back into the competitive stimulus effort, where the ECB is not participating, and subsequently it looks a lot better for continuation to the upside here on the euro dollar. Remember, the ECB and the Fed's balance sheet, the ECB balance sheet is actually contracting, where the Fed continues to expand at a reckless pace. So that is a possibility. That's always something that will act as a driver forward. But I do think that there's a crisis risk that could revive the situation in the Eurozone and hurt the euro subsequently. And some of the things that I want you to keep an eye on for the upcoming session is not just on the docket, because we are going to see some early pre-summit debates with the EU leaders. They're actually going to meet on Thursday and Friday and discuss such important topics as what to do with Cyprus. But there's also going to be a delayed meeting between the Greek Premier Samaras and the Troika. He's trying to get the next payment, about just over 2 billion euros worth of aid for this month from the Troika, but he needs to do so by taking more drastic actions, potentially firing over the next couple of years a significant amount of the civil labor force, which was very, very unpopular. We also know that in the upcoming session, potentially Ireland is going to sell its first government bond, 10-year bond, since it first received its bailout back in 2010. That could be a very substantial outcome. That could be a very substantial driver. And of course, we also have, or this was new, but we just heard that Spain was planning on selling ultra long bonds, as they call it, sometime later this week. And that's just there's not a better measure of the market's sensitivity to, or the market's gauge of how risky something is than to raise debt with ultra long duration. So a lot of opportunity here to see some risk before we even get to the official EU meeting on Thursday and Friday. So keep a very close eye on the euro side of things. Don't just get wrapped up in the other factors. But there are some other factors, particularly risk appetite trends, which I think is quite interesting. The Dow and the S&P 500, and really you can find it in European equity markets and Asian equity markets. This is the Nikkei 225. Were marching higher through Tuesday's session. Now, of course, you can see that it's coming off a little bit here in the early trading hours of Wednesday, but I want to highlight the Dow specifically, because this index has rallied with Tuesday's close, 8 consecutive days. To give you a sense of how remarkable that is, we've only seen a handful of 8 consecutive day rallies over the past 2 decades, and we've only seen a 9+ day move since way back here in 1996, November 1996. So you do the odds. What's the probability of seeing a ninth day advance from the Dow? It's going to be pretty low. Now, this does not necessarily mean that you're going to get a strong reversal, but it is likely that we get a negative close on the Dow. And if you're getting a negative day on the Dow, it's going to probably spill over to European equities and Asian equities. And subsequently, if you have that consistency, you're talking about FX risk too. Risk aversion for the euro-dollar. All right, how would that impact the euro-dollar? It's negative. It's a bearish push for the euro-dollar. The dollar's a safe haven. The euro is a riskier currency. It's also a potentially negative catalyst for the Aussie dollar, which has recently made a inverse head and shoulders break, and now is testing that former resistance as new support at 130. Depending on how strong a risk aversion move is actually fostered, it could be a very short-lived break to the upside. So that's why I've not actually taken this particular trade. It has considerable potential, but I'm going to be a little bit more cautious with this than I would be otherwise. And if you really want to get into committed risk aversion moves, then I think that the most interesting setup, of course, is what I've been talking about consistently over time. The yen crosses. These yen crosses are exceptionally overbought. The dollar yen is up 25% or just short of 25%, and as little as 5 months. I guess it'd be 6 months at this point. That is a remarkable move. And that move is clearly running outside of the traditional boundaries that you usually see in stimulus, which when you compare the dollar yen to the Fed and BOJ balance sheet, look at the deviation that exists there. I mean, one of these has to reconcile to the other. And we know that maybe a month from now, we could be in the midst of a massive stimulus program from the Bank of Japan. If they move it forward, they determine that they want to implement immediately if Kuroda actually wins the Bank of Japan governorship. But in the meantime, we have a lull. We have a little bit of a downtime. If risk aversion kicks in, it's going to kick in hard with the currency that has been so significantly depressed as in the yen, and subsequently has a great potential for reversal. Now, in the form of the yen crosses, I like the dollar yen most. It won't retreat likely as far as some others, however, so you have to be careful of that. If you want to see a deeper retracement, euro yen is exposed, and that one I decided to take second half of my profit earlier this week, and it has carried through a little bit more, but I'm okay with that because I'd rather take profit than have just been knocked out at break even, which is what happened with my second half of my pound yen position. I had to pull back, and I trailed to stop to break even, which just barely nicked. So the head and shoulders pattern here makes a very attractive overall setup. You can complete the shoulder with the initial run to the downside if risk aversion kicks in the near term, but continuation is the bigger factor with a break of that neckline. Now that's a little bit of concern, and I'll tell you why in just a second, but the Kiwi yen has a great setup. The Aussie yen has a great consistency, and then you can see that reversal. And the CAD yen, which has stalled at the previous swing high here, can have a pullback as well. All of these are well positioned, and they will react the same way if you have a concerted risk aversion move. All right. But as I said, a couple of these are a little bit more complicated in terms of seeing a aggressive reversal. The pound yen is on that list because if you look at the pound dollar, we can see that the pound individually is exceptionally oversold. Now, we looked at some of the individual factors of how we can assess that the pound is overdone. I have a new one actually, just to add to that little assessment. Here we have the pound dollar versus all the upper wicks and lower wicks that are over 75 pips. Now, this past session, Tuesday's daily bar closed with a 75 plus pip wick to the lower wick. All right. Now we've seen in the past 2 times this has happened, which hasn't really happened before that in 6 months, that you've had continuation. It wasn't a reversal, and I can point out to you those specific instances. It was this bar and it was this bar. Both of these had continuation patterns. All right. They did not test a reversal. But you have to be careful because historically speaking, yes, it will see short-term corrections more often than not. So you can't write it off. It's just another piece of the puzzle to consider. But we have seen the first higher high from the pound dollar as well in the past 6 days, I believe. So there's a number of technical factors. Fundamentally speaking, the pound has run far askew of the stimulus expectations. When we talked about the deviation between the dollar yen and the expectations of stimulus between the dollar and the Fed balance sheet and the Bank of Japan balance sheet, you can see we're much further away on that comparison between the pound dollar and the Bank of England Fed. All right. There's a lot of speculation that the Bank of England is going to pick up its stimulus pace, and it was only amplified this past session with the negative data that we had on the docket, including the industrial production and also with the trade factors. But the trade factor was a little bit better. The NISR, the NIESR GDP estimate was equally discouraging, but it's still really, really early to say that the Bank of England is going to open up the floodgates. They haven't even said the blatant, obvious threats like the Bank of Japan has made. All right, in terms of where they're at in the stimulus factor and how the market is reacting, they're really early on the curve. All right, this is the speculation is really starting to pick up and really starting to impact the pound. All right, where the Bank of Japan has seen the same thing for the past number of months, but they're starting to get to the peak of that curve, and it's having less of an immediate impact, and it needs to have follow-through. So that's where we're at with the pound, and if we don't see any kind of material confirmation of this, then the pound is going to be exposed to a potential correction amongst all other factors. A potential catalyst I could look for in the upcoming for the rest of the week. You actually have on Thursday, early Thursday morning, late Wednesday evening, a Bank of England 2013 Q1 bulletin. That could potentially give us that factor, that assessment that stimulus is coming. But this very much feels like a sell the rumor, buy the news kind of event in the case of the pound here. So keep that in mind. I'm not advocating going long just yet. I will not go long yet, but if you see more confirmation that a turn is coming, and if fundamentals start to do support it, I think this has great potential. And if you do have a pound dollar move to the upside, the pound recovering, in other words, the euro pound gets the same treatment at that trend line top, all right, very significant technical positioning, but it also complicates the pound yen, because while the yen crosses can reverse, the pound, if it does have that positive factor and you have risk aversion at the same time, those are going to be conflicting signals. So a little bit concerned there. And of course also the pound Kiwi above 84 or 184, which I still think is an interest to me. Now the upcoming session we have some very significant event risk isolated to a currency that we don't really watch all that much. All right, if you check it out, this is one I will be covering live, the RBNZ rate decision. All right. Now I have some exposure for the Kiwi dollar. I am still short on the Kiwi dollar after that wedge break to the downside. Continuation has been absent, however. We've retested that former support as new resistance, but we haven't seen the conviction and follow through. Heading into the Reserve Bank of New Zealand's rate decision, there is a modest assumption that they're going to ease back on their stimulus path. They haven't turned to, ease back on their tightening threat. They haven't actually made the transition to a threat of easing. They haven't said we are going to ease rates, or they haven't even given an indication that they're going to ease rates, or that they're going to introduce some level of stimulus. But we have seen that the drought in New Zealand has worsened. We have seen a number of comments from Governor Wheeler as of late that says that he's concerned about the height of the Kiwi dollar. All right, so there's a few factors that are playing in here. If there is a surprise, all right, a surprise to the upside, they're maintaining their hawkishness. I think it will have a potential positive impact on the Kiwi, but it'll probably be measured because it's something we've seen before. Alternatively, if they do back off, if they start to suggest that a rate cut could come, or even a intervention effort, which would probably be less likely, but he has been talking about it, then you can see more likely a aggressive reaction to a negative or a bearish statement. All right. So that being said, there's a greater chance of a move to the downside, or an aggressive move to the downside, than there is an aggressive move to the upside. So that's why I actually am remaining in my Kiwi dollar short position. Another interesting pair, a couple actually, the Kiwi yen certainly fits the bill of being an interesting pair. If it's an aggressive reaction to the downside, Kiwi sell-off, then you can see that the situation we have here with the rising channel, good for a short-term view, but unless the yen crosses are dropping across the board, don't expect this window to continue on its own. But we also have the Euro Kiwi, which is in a nice congestion-based pattern here. All right, and the potential for a breakdown or a breakup or a breakdown with that congestion pattern. The pound Kiwi, I prefer a move to the upside with the pound rebounding, and if the Kiwi is dropping at the same time, that would be a ideal fundamental setup. Of course, ideals don't often happen, so you have to just keep that scenario in mind. And one that I haven't looked at all, but somebody brought up in the Q&A, and I think it's an interesting currency pair to keep a close eye on, pound Kiwi. Look at this pair. All right, you've had this is an 8-hour chart, but it goes all the way back to mid-2012, and you can see that there has been a very consistent trend line top here. All right, so if we zoom in, you can see that we are an expanding wedge, and we are now in a contracting wedge. And the technical boundaries are quite clear. If we are to have a breakout from the New Zealand rate decision, if it is meaningful enough to provide such a breaking move, then you could see potentially move to the downside or rebound to the top of this trend line pattern. And depending on how aggressive the language is, it could be a move up to the upside, which stalls and comes back down. There are a number of scenarios. We'll cover them in the actual rate decision warm-up so that we can see the potential there. All right, a lot of opportunity in the next 24 hours and really through the end of the week in terms of these bigger themes. The New Zealand dollar is a one-off kind of situation, but wrist trends, yen crosses, pound crosses, all of these pairs are exceptionally positioned for a potential move. And of course, the US dollar versus the risk conditions creates a very interesting juxtaposition. Would the dollar maintain its one-to-one relationship with U.S. equity markets if the U.S. equity markets start to drop off? Would the Dow and the dollar drop at the same time? I don't think it necessarily would. I think that if there was a risk aversion move, an aggressive one, the safe haven appeal of the dollar would kick in, and it would substitute for something like the dollar yen, which would absolutely drop. But something like the pound dollar, something like the euro dollar, something like the Aussie dollar would show benefit to the U.S. dollar as people move their capital to the safer of the currencies in those pairs. And the last thing I want to leave you off with, keep a close eye on gold. We did have a break to the upside. We were talking about that tight congestion that we've had between 1585 and down to about 1565. We broke to the upside, but there wasn't much in the way of follow-through. The most important thing the two most important things to gold is stimulus. And we don't necessarily have a clear and decisive time frame for when the new stimulus contributors are going to enter their way into the market. Of course, that is going to be the Bank of Japan and the Bank of England. All right, so when this stimulus, this balance sheet indicator here starts rising again, that's going to be our signal that gold is going to have a better fundamental drive. Or we can have a drop in the U.S. dollar. And if the dollar drops, gold is going to benefit for it because it is the primary alternative to gold is the world's most liquid currency, and that is the dollar. So a lot of opportunity out here. It's setting up, but it has not made its convictions known just yet. So be patient, but keep a close eye on these markets. Good luck trading out there, guys, and I'll update you once again tomorrow.